welcome into a brand new episode of WSI TV. Enjoy the show. Hi guys, welcome back to WSI TV. Today I am joined by Jordan Bishop. We are doing our regularly scheduled programming of Jim's Market Update. Unfortunately, he could not be here with us today, but we do have a new face for you that you've not seen Jordan on the channel for quite some time because we just got back from the annual Wealth Summit, which was so exciting.
Yeah, absolutely. It was a lot of fun. Thank you so much for coming out and meeting us out there. We're finally back from Las Vegas. It was a great time. I'm sure you may have seen Leah and Taylor's video from, was that Friday?
We did Friday, yes. We did a little live stream,
yeah. A little sneak preview of what we went through. And I'm sure there'll be much of that, but it was a great event. We met a lot of you great people out there, and thank you so much for coming.
Yeah, it was awesome, and we were really great to meet all of the people that have been watching the channel, and if you're new here, welcome. So today we're going to be getting into some of just the general market. As you know, that 2019 is kind of winding down. We're looking at the things that are happening that kind of are following us from last year into next year. Right. So I think the first thing we need to talk about is that we hit some record highs early this morning.
Yeah, quite a few actually. So we've got the chart up here in front of us now. It's been a few days of just non-stop highs.
Yeah.
There was a little bit of a blip last Thursday. The market sort of reacted a little bit and swung back.
Yeah.
But nothing but blue skies right now ahead of us, and you know, all we're doing is we're just listening to what the market's telling us. We're dancing to the market's music. So yeah, it's been quite crazy, you know, and there's a good amount of volume in it as well. I mean, it's not overpowering, but again, it's not lackluster. So there are people actually buying into this Q4 end here.
Awesome.
And you know, we're going to get into some of the details in a little bit, but I think the retail sector is going to benefit strongly. But that's a basic assumption with Christmas time, of course. But it seems like nobody ever expects it. Like it's never fully priced into the market. You know? In a real situation, you would see the market way high. I mean, you could expect it in September, October, you know, as long as the market's good. But it always seems to catch people. You know, and then I assume we might see a little bit of a correction, but I think it's all looking extremely healthy, at least up through Christmas here. So
well, that's good. Good news on the horizon.
Yeah.
We do have one company that in particular has kind of been in the news quite a bit this year. Boeing did release that they're trying to meet record production rates in 2020, which is obviously very good. They're trying to bounce back from the whole thing with their flights and their plane issues. But we do have concerns about the Dow Jones because of it.
Right, and I just to touch on Boeing, I think that's very bold.
I agree.
I think they should figure out their issue that they have in front of them right now. I mean, to set
and then,
lofty goals when you're healthy is great, but when you're not so healthy, I suspect there'll be more airlines that come out with lawsuits and settlements against them as well. They have a lot of grounded planes right now, and if you think how much real estate that those planes are taking up.
Exactly.
Those planes are big, and I don't know the numbers off the top of my head, but they have a lot of the planes.
Oh,
you know?
yeah,
so,
I'm sure.
That rental space isn't going to be cheap for them, so I would have liked them to keep that as an internal goal, maybe.
Yeah, maybe.
I mean, but to touch on the Dow Jones, you know, we were talking a little earlier, Taylor, and you make a great point. Looking at the Dow, there's 30 big blue chip stocks in there, and while that is great indication for how blue chip America is doing, it's not necessarily the best. It's not necessarily the clearest view on the whole stock market.
Exactly. Yeah.
So what we look at really is the S&P 500 is a basket of 500 stocks. It's a little more evenly distributed across. So, you know, if you've got Boeing pulling the Dow Jones down,
exactly,
that's one out of 30 stocks, that is, and you know, plus whatever else is going on.
Yes, yeah.
But if you have, you know, say if Boeing's in the S&P, it's 1 out of 500, so it's not as much pull. So I think, you know, we like to look at the S&P 500 for a clearer view.
Yeah, exactly. Yeah. It takes me back to like high school stats class when you talk about averages and the way that outliers really impact your average, whatever number that you're getting, but the median is not. So it's kind of just a different metric that you're looking at. And when you do have those outliers in the Dow, it can go up, it can go down, and it may not be an accurate representation. So I think that's a really good point. And we do say that a lot around here, but I don't know if we've ever said it to you guys. So it's definitely a good piece of advice.
Yeah, I mean, the Dow is great to look at. I mean, you want it moving with the S&P 500.
Exactly.
It's one of the big three indices, but it's that's why we talk about the S&P 500. And if you want an even broader range of the market, then the NYSE, the New York Stock Exchange, is another one. But I'd say stick to the S&P 500 as we do, and you should be good with the market's health.
Awesome, yeah. And then you and I were talking very briefly earlier about how this is the last couple of days here in 2019. I've read 2 different publications talking about it today, and one said, all is well, nothing's going to happen, everything is out that's going to be out, the market's going to chill for the last week. And then others have said, no, everyone's going to cram in everything that they can, all the procrastinators and everything, they're going to get all these last minute things on the docket. So what do you think about that discrepancy there?
I think it's interesting. I think a part of it comes down to, again, clickable headlines.
For sure.
One thing I realized today, I read it in passing, and it just sort of dawned on me, it's the end of the decade,
Yes.
It's stupid, but it shocked me. It's sort of, I was like, oh yeah, it is. So maybe there are some companies thinking that. They look at it year by year, but there's definitely a psychological factor to it. There's definitely round number. We're rounding off this next 10 years. So I don't know. Again, I think there are some clickbaity headlines probably coming, but then again, there may be some people who are trying to cram in everything, that psychologically to wrap up the decade strongly. But I think, the market, and we're looking at the market, the market's looking strong. It's going to wrap up the decade strong, I think. So these headlines can say all they want,
Very true.
And they don't always agree with each other, but it is interesting, because that's less of like news story, and it's more of like, you could just look at the numbers, how many reports, and wait until
exactly. They're kind of just grasping at straws there, I think. But you do make a good point. So moving on into other headlines, talking about clickbait, the trade war, which I will go pay the jar in a moment. I don't know if you guys have been following the news, but President Trump did sign a Phase 1 agreement with China late last week. So not everything is set in stone. There's still very many things up in the air, but this has been good for the market. That's why we saw that huge surge at the end of last week. So it's definitely a good development there.
Yeah, surprise, surprise, it was sorted out before Christmas, right?
Exactly.
Christmas came early. I think we sort of expected that. It was strange for him to set a deadline right before Christmas.
Exactly.
With consumer spending.
Yes.
Being a big part of this last push. I think, whichever side of the political spectrum you're on, you just got to look at what he's doing. He's looking at a re-election in 2020. So maybe this was one of his cards that he's playing. I'm so sick of that term, trade war.
No, so am I. Yes,
It's I don't know. It's so easy to draw a
It
headline
is.
out of it. And, we've done so well sort of dancing around it, although we've said it twice in this episode.
We're falling out of practice here.
But I think it was always on the cards to sign that deal before Christmas.
For sure.
I think he had...
Especially with those tariffs meant to go in yesterday. I think that was definitely something on the books for sure.
Yeah.
And yes, we did want to touch a little bit on the pound. We have quite a few international subscribers, and the election was recently in the UK.
Right.
But we saw the pound surge last week, which is pretty out of the ordinary, seeing as the trends that we've been watching recently.
Yeah, turmoil will usually push a currency down. And just for those of you who maybe don't know, you can actually trade the pound without being an expert currency trader. You can use the stock ticker FXB. So you can look at that chart, and now you're a currency trader. If you trade that. The pound has been sinking with turmoil, with Brexit, and mostly uncertainty. Currencies like certainty.
Yes. Yeah.
The dollar's been surging, and basically, all the currencies work against the dollar. So you could say most currencies have been weak. So we've seen a bit of a resurgence, as you said, from the pound this past week. So I'd be interested to see what the dollar does. You can look at that chart with the ticker UUP. I wouldn't make a move on the pound yet. I think it's interesting, but maybe something to cover on Friday on Bishop's move.
Definitely, we'll touch back on that.
If we do see something,
Yeah, we'll definitely touch back on that if we see any interesting movement there. But it was something that was out of the ordinary, so we did want to get your 2 cents on that.
Yeah.
But moving on.
Pence.
Yes, there you go. See, you would know, I wouldn't. But we're gonna just move on really quickly to Disney, which, if you guys know, Leah and I have a huge soft spot for Disney. We talk about the box office earnings, just because all the media and entertainment that they own. We saw Frozen 2 came out in November. It has since become Disney's 6th film in 2019 to pass $1 billion in the global box office, which is amazing. Like,
that is incredible. I haven't even seen the first one.
Oh, well, they're very good. You should go watch them. That was an interesting metric that we saw on Disney, so of course I'm expecting quite a bit from them next year.
Right. And I'm sure Disney Plus is just, it launched back in last month.
Yes.
And, it's just the beginning. I think they're really looking to take over the world. I think Netflix is running out of steam a little bit. They're going to have to...
A tad, yeah.
They're going to have to come up with some innovative things.
Yeah. Well, that'll be interesting for your daytime TV watching to see what they come up with.
Yeah, exactly, yeah. But yeah, interesting. Disney's a powerhouse right now. They're making
for sure.
moves.
Yes, yeah. And then we are just going to finish off on something that you can do at home. If you didn't attend the AWS, we talked a lot about Robinhood because it's a very easy stock trading platform to get started on. It's the one I started on when I started here, and it's very simple to use. But they recently announced that you can now purchase fractional shares. So do you want to explain a little bit what that means?
Yeah, absolutely. And first and foremost, I just want to say we can't necessarily recommend one broker over the other. We do have a list of brokers at wsitv.com/brokers. But the point is here, Robinhood does something and everybody else follows suit. So it doesn't matter what broker you're with, but right now Robinhood is the one who's playing with these fractional shares. So basically what that means is, you don't have to spend $2,000 to own a share of Amazon. You can get 10% of it for $200.
Exactly.
You can get 1% of it for $20. I'm not sure how low it goes, but
I believe it's at $1. You can start at $1.
Okay. So there's ups and downs to that.
Yes.
I think, and like I said, I think Schwab has already started doing this as well. Basically, they're pulling people into the market who can't necessarily afford to play the game, but want to play the game. And I think that could be a little dangerous because depending on how much money is invested. But these people who are going to be, it's great. Amazon's ridiculously overpriced. Right?
Yes.
So if you want to own some Amazon, that's fine. And we'll get to the pros in just a second that I spoke about. But I think, you get too many of these people just throwing money in. If there's a spook in the market, I think they'll be the first to pull their money out. And if there's enough of them, the cards could come tumbling down. Depending on the capital that brings in. But that's where it's shaky. The upside, I think, comes with something that we touch on quite a bit, position sizing. So, a lot of the times we'll say to take, say you've got $1,000, split it evenly into 10 $100 trades. Now, what if you've got a stock that's $200, you've got a stock that's $50? It's not always possible.
Yeah.
Fractional shares will allow you to do that. And I'm sure there's a way of splitting it into percentages or, or just doing the math.
For sure, yeah. But it does really make it a little bit easier, I think, for sure, yeah.
Yeah, so honestly, I'm on the fence of whether ultimately I think this is good or bad.
Yeah.
I think it's good for people who want to learn. It's bad for people who are just going to throw money at Amazon or Facebook. Not that they're bad.
No, yeah, but you and I were talking last week that some people don't really know anything about the market and just say, well, I like this company, let me invest in them. So they kind of just cherry pick one and throw all your money in it, and then that may not be so great for the rest of the market.
Right.
So,
but it's great for people who want to learn, like you. That's why you're watching this. So hopefully we can guide you through that. And there's nothing wrong with buying fractional shares as long as it's not just money thrown at the wall.
Exactly, yeah. So I think on that note, I think that's all I had for you today, Jordan. Thank you so much for being here.
No problem.
And we will see you guys very soon. Have a great day.
Thanks for watching the latest episode of WSI TV. Be sure to visit wsitv.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at wsitv.com.